All right, guys. We are here today. Hold on, let me get all these tools up. I've been working on other stuff in the background, but we're here. We're starting the stream. Hold on, let me get my banners up here. Today we have GDP data going live. Honestly, it's a pretty big report. Let's pull everything up. The NASDAQ has had a brutal correction on the downside here. Here's the SPY. SPY is corrected too. This is mostly from fears. Like, they added a bunch of chip companies into the blacklist for the upcoming levies and trade war, and that basically freaked people out yesterday, caused these big, huge drops to the downside. If we look at NVIDIA, NVIDIA is certainly not immune to it. NVIDIA fell all the way down yesterday to 111s, 110s, one of its lowest levels in a while here. Let me, sorry here, I'll put my green screen up. I can do a normal stream, or should I do my green screen today? I haven't even hit my coffee. All right, we're here. I was just going to ask, should I do, I guess I'll do my green screen still today. But yeah, man, chip stocks are down huge. Is it time to buy the dip? I'm going to ask this question. Let's get some music playing. Let me know if the sound is good. We should be pretty good. Yeah, so the president announced 25% tariffs on all foreign-made vehicles and some auto parts. He made good on his promise to impose tariffs on foreign automakers, 25% duties on all cars and light trucks not made in the U.S., as well as quote-unquote certain auto parts. He said, quote, "This will continue to spur growth that you've never seen before," end quote. From the White House yesterday on Wednesday, signing an executive order putting the tariffs in place. The 25% tariffs take effect on Doomsday, April 2nd, and add to existing tariffs. They're thinking about $100 billion in annual duties will be collected. $100 billion. White House Press Secretary Caroline Leavitt said that he would make the announcement earlier today during a news briefing with reporters. Shares of GM, Stellantis, Ford, Tesla traded lower following these remarks. BMW, Porsche, Volkswagen, and Mercedes trading in Germany also dropped. So this automaker news is big. We're going to do a poll right now. Real quick. Let me get the green screen up. Should I put the green screen up, chat? Put yes or no in chat. Green screen or no green screen? Yes or no? Green screen or no green screen? Top 3 earliest financial streamers of all time. Yeah, I mean, we're not super early. It's like 7:30 in the morning. I mean, we got 8:30 economic reports. So, I mean, we might as well cover it, right? Yeah, I got a nice background, honestly, man. Like, I really do have a nice background. My office is honestly pretty cool. This is one of the reasons that we bought this house is because of this office, honestly. I needed a good office for work, and it's a pretty cool office. You know, it's a pretty nice office. GDP data today, guys. Yeah, Farrell, just let it out, bro. Like, he's so angry all the time, man. I feel for him, dude. You know, just let it out, man. It's all right. The name fits, I guess. You know, he's just angry. How can you be I'm a morning person, dude. So, like, when I first wake up in the morning, I am annoyingly happy. Genuinely annoyingly happy. So, listen, I'm going to be happy because it's early. It's a heater. I'm annoyingly happy in the morning, guys. Annoyingly happy in the morning. I'm annoyingly happy in the morning. Honestly, Palantir all the way down to $90. It's still over 90. We're still looking at it. Nvidia down to 110s. The SPY down to 568s. The NQ all the way down to 20,000. GDP drops in an hour. Let's get a timer up here. You mean you, Judith? Let's be honest. We all know that's you. Honestly, I don't really buy up any shares of anything on the stream. And so I'm not really sure what kind of symbols would make this up. I'm pretty sure they're just trying to troll, and that's okay. But I'm not really sure what symbols. If there's an inverse John ETF, name some of the symbols that are on it. I'm genuinely curious about it because I don't ever buy anything publicly. I don't really ever even say I'm interested in buying up stocks. So it seems like whoever it is probably just trying to troll a little bit. Alibaba showing off a new AI model after warning U.S. big tech it looks made for Apple. Alibaba launched its latest AI model, which says it's capable of processing audio and video while being able to run a smartphone. This could be good news for Apple. They said the new model, named Quinn 2.5 Omni 7B, what a name, is a multimodal model, so it can process text, images, audio, and videos while generating real-time text and natural speech responses. Notably, it's a relatively small at 7 billion parameters, a measure of an AI model's size and complexity, meaning it can potentially run on smartphones without needing a constant connection to a server. It can make it perfect to equip Apple's iPhones with AI capabilities overseas in China is what they're looking at for this thing. So we'll see if that's good news for Alibaba. Again, a lot of stuff is down. Baba at 133s. Okay, well, if it's not you, it's all good, Judith. I just assume anybody bringing it up regularly, it's just kind of them after they get banned. But again, like, if there is one, what are the symbols, right? I don't really buy anything publicly. I don't even tell people to buy anything, And so I think whoever it is, they're just kind of mad, for whatever reason. But I don't ever really buy anything publicly. I don't really tell anybody to buy anything publicly. The only thing I really trade on stream is futures. And so, that portfolio, I don't know how that would really work. It doesn't really make sense. It's kind of nonsensical. Elon said tariffs will have significant impact on Tesla. I would assume the administration is going to protect their friend, though. Right? Like, that's what I would assume. Who's going to be one to name the AI model Skynet? I don't know, man. No green screen makes it look professional. As long as there's tariffs, there's the market will remain volatile. Yeah, for sure. I think the inverse John ETF has SDAO. I don't know, man. I kind of called this correction. Like, anybody that's being truthful knows that I called this correction, right? Like, in December, I told people I stopped buying. I thought we might correct soon. We started the correction when? We started the correction in February, so I was a month off and I got out, and it was the right move because we corrected 15% relative to where I was. And so, yeah, I mean, if you watch me over the last 4 or 5 years, I've been very critical of people that overpredict crashes, right? But that doesn't mean I never predict pullbacks or I never predict corrections, because I think we're always going to correct eventually. We're always going to crash eventually as well. I just don't think blindly yelling out crash every time you're wrong about a prediction, or manipulation every time you're wrong about a prediction, is the right move. I think you got to just wait for it, because it's not going to happen every year. You're not going to get these big crashes every year. You got to wait for them. It takes time. I'm not really defending myself. I'm just kind of talking to the chat. Jonathan said Inverse John would have these things, so I'm just kind of explaining myself on like, I'm not really defending myself. I'm just kind of interacting. Goldman Sachs lowered its shipment forecast for chips. Yeah, no. Trump added, I think it was, let me see how many. It was like, I had the article here, so hold on. Yeah, so he added 80 Chinese companies to a trade blacklist, citing national security concerns. It included Inspur, which is China's largest server maker and a buyer of NVIDIA chips, right? So this is one of the catalysts that sparked this recent downturn is this stuff here, right? So that mixed with GDP coming out today, PCE coming out today or tomorrow, next week, April 2nd, Tesla deliveries, as well as the news that he did 25% tariffs on all foreign-made vehicles and some auto part news that we talked about a couple minutes ago. I think all of this stuff is contributing to downward action. I think anytime the market hears tariffs, it panics, and I think we've heard tariffs a lot recently. So I mean, I think you got to just be careful and be smart and understand the market's volatile right now, because it is. It's really volatile. It's macro conditions, uncertainty, not correction, in my opinion. Well, I mean, a correction is defined as a 10% or more drop in the market short term. And so the QQQ's down 15%, the NQ's down 15%. The SPY at its lows was down 12 or 13%. So by the textbook definition, we have corrected. Now, whether the correction is going to continue, I don't know. I think after yesterday's big drop, we're still got some room. Like, I think 20,000 on the NQ is a big spot. I think we've still got some room, though. So, like, here is the lows of the last 6 months right here. So these are the lows down here at the last 6 months. This is where we are now on the NQ, like the QQQ, the NASDAQ 100. 100 of the largest company in the world added, into a index. We still have all this room right here, though. So we still got a lot of room. We still got all that area right there to pull back some. So if we continue dropping here and then break this low, obviously I think that looks really, really bad. But I think we got a lot of space here yet. So we still have all this time. We've got all this area right here we got to pull back underneath it. This is more of a burst bubble. Yeah, but that's what most corrections are, actually. Third best correction caller in the world. How long did you think the correction will last? I really didn't know. I don't know. I was green on my TOS account for sure, Judith. So I was definitely green last year in 2024. So I ended up, and I would get in trouble if I lied about it, but I ended up last year for sure. So yeah, happy about that for sure. We got about an hour before GDP data comes out. I'll put a timer up. We got 54 minutes. Put this timer up here so you can see it. I'm not sure. I'd have to go look. It doesn't matter either way. Public speakers get heavily criticized when they make a single wrong prediction, but their accurate predictions also often go unappreciated. That's the nature of markets. I think a lot of people overpredict crashes, and I think a lot of people just get emotional. Like, people are really emotional people. John's greatest quote ever, people are really emotional. I think people that disagree, sometimes it's hard for them to say, hey, I disagree with you about this, but we could still be cool. I think that's a very difficult thing for a lot of people. I think people get emotionally tied up, especially in terms of like markets. I think they correlate it with politics a lot. And so they ingrain it with their political bias, and then that turns into like toxicity, where they make it about politics, and it's not. It's just not. It's related in a way, but it's certainly not directly related. And I think that's why you got so many emotions, egos floating around. Yeah, no, next week is honestly a crazy week, man. We're going to upload a video after today's stream, and we're going to be uploading a video after today's stream, and one of the things that we talk about in that video is all the stuff that comes out next week, because next week's freaking crazy, honestly. We've got April 2nd, we've got JOLTS, we've got Tesla deliveries, we've got jobless claims unemployment, we got ISM services and manufacturing, we have non-farm payrolls, unemployment, and more. And so next week's freaking ridiculous. It's got so much stuff that happens next week. I'm nervous about it. Even though it's good for my channel, the more stuff we got going on, the better it is for my channel. So I'm excited for it because we've got stuff to cover every day, and we got a lot of economic reports. But it's going to be busy and a little stressful, I think, as well. So we'll see how it goes. We'll see what the market does, especially with the big corrections that we've seen so far. You just got to be careful now. This is like some 007 music. All right, so the U.S. 5 to 30-year yield curve tops 62 basis points, which is the steepest since 2022. JP Morgan cuts GM price target to 53 from 64, cuts Ford target price to 11 from 13. So a lot of vehicle makers after the current administration's levies on vehicles, 25% tariff announcement. We also have this news here with Bank of America executive says that BFOA mortgage applications jumped 80% in quarter one. Why is there so much data coming? Well, I think every now and then you just get a week that's packed full of stuff all in one week. It's the end of the quarter, I guess is the easiest way to put it. So not only do we have quarter delivery numbers, we've got tariff announcements that come after the quarter ends, but we also have our regular monthly economic reports after this week, which was a relatively slow week outside of GDP and PCE. We just got a lot of stuff happening. And so PCE coming out today is influencing everything. And honestly, the market's on the wake of like a big correction too. So it's, yeah, you just want to be smart and careful. A lot of stuff going on. Yeah, but again, the current administration announced 25% tariffs on all foreign-made vehicles. Yeah, we'll see what Alibaba's AI model looks like. Here's Alibaba right here, which is Baba. They are, let me put the previous closing price up. We're at 133.60s for Baba, 133.60s. So it's honestly not down as much as a lot of stuff. The nasdaq obviously is down big. We got Baba up on the right side as well already. Nvidia at 112s. We've got AMD. Look at AMD, fell all the way back down from 115s to 107s. So AMD and chip companies looking pretty weak here. Did I do a poll yet? I didn't here. Let me do one. Hold on. Does today's core PC or just today's GDP report? What is it? 2.3%. Does today's GDP report show higher or lower than the 2.3% expected? I think it's 2.3, right? Let me make sure. Yeah, it's 2.3. Jobless claims expected at 226. We'll put these numbers up on screen as well so you can see them. But yeah, there's the poll. We're also gonna put the text up so you can kind of see what happens here. Let me squeeze this onto the screen. All right, guys. There we go. GDP expected at 2.3. Jobless claims 223. Let me make sure this is right. Or 226 is what I'm showing, actually. 226. So a slight uptick in jobless claims week to week. There we go. All right, so 45% think we're going to have lower GDP. 43% think we're going to have lower. 19%, 20% as expected. 40% think higher. So we're pretty split down the middle, honestly. Just bought $10,000 worth of Fubo. Is Powell speaking anytime soon? He spoke last week for the FOMC meeting. I don't know. I really don't know. We'll see. Fubo. I had a friend that bought up Fubo not that long ago. Let me see. Yeah, it's down. I don't know enough about Fubo. I have Fubo, honestly, as a service. No, I don't own an EV. Let's take a look at Tesla here. So Tesla down. Tesla honestly isn't down as much as some other stuff here. So Tesla could be down more. Like it's down big over the last couple months, but relative to other stocks yesterday, I mean it dropped yesterday, but it wasn't terrible. Versus what could have happened. Yeah, so all right. Sorry, I had to do something. Yeah, so now that we have more people here, do you guys like the green screen or you like the background? Let me know what you guys think. Green screen or background? Let me know in chat right now. All right, so background, green. Auto tariff is not good. Yeah, I dig the background versus transparency. Background is cool. Background. Floating hedge on. Yeah, I mean, so it looks like most people want the background like this. I could even make it a little smaller here. But yeah. Well, no, usually we have a green screen and you can you can see more of the charts. Is the only thing. 6 billion people watching. Oh, we got 500. That's good. GDP releases will have thousands, but we'll have at least like 1 to 2,000. I did get used to the no background though. It's not like I'm staring at you. Yeah, the auto tariff is something that came out overnight. Again, just to put this into perspective, the current administration announced 25% tariffs on all foreign-made vehicles and some auto parts. So he made good on his promise to impose tariffs on foreign automakers, imposing 25% duties on all cars and light trucks not made in the U.S. You'd think this would benefit Tesla because Tesla vehicles are made here in the U.S. He said, quote, "This will continue to spur growth that you've never seen before," end quote. They're set to take effect on April 2nd, as a lot of other stuff is. So, yeah. Big three are getting hit: Ford, GM, and Stellantis. They're concerned about their impact. GM, Ford, and Stellantis build their vehicles in Canada, Mexico, and China, and they foresee higher production costs due to the tariffs effect. Yeah, it's interesting to see what happens. A lot of stuff's down, though. Palantir back up some after hitting $90 a share. Again, you can see the NQ bouncing right around 20,000. Nvidia hit 111s. Tesla sitting at 270 still. So, compromise, use a green screen but with a photo of my library. Third best online economic releases on the internet right now. Definitely top three-ish. Three-ish, I'll say. Bring production back. Yeah. I think these are going to benefit Tesla. Shouldn't GDP be huge because of AI? Well, no. It's at 2.3%. A lot of people think the current quarter that we're in is going to be negative, right? So remember, GDP is lagging. So we're looking at GDP from last quarter right now. This current quarter, we're not going to know until April after the quarter ends, right? Because we're still in the quarter now. So we're not going to know what the actual GDP is until the quarter actually ends. And so we're not going to get this quarter's GDP until April, which is quarter one of 2025. A lot of people think, including some Fed bodies, think that the current quarter is going to be negative. Now, we don't know for sure. I think they said 1.8%. Yeah, so Atlanta's Fed GDP now, at the end of February, so about a month ago, the GDP Now tracker of incoming data indicated that gross domestic product is on pace to shrink by 1.5% for the first quarter. While the tracker is volatile through quarter and typically becomes more reliable much later in the quarter, it does coincide with some other indications showing a growth slowdown. Early economic data for the first quarter of 25 is pointing towards negative growth, but this was a month ago. We'll see if it changes. You know, the data, it's all data dependent, so we'll see if this changes. Who knows? But obviously, if this is a negative quarter, people are going to start the recession word's going to start coming out. So y'all just be careful. Yeah, y'all just want to be careful too, man. PCE data tomorrow, GDP data today. It's kind of a it could be sketchy. It could be sketchy. I would just be careful, you know. Do you guys think we're going to continue to see red action? Do you think PCE? I think PCE is going to be bigger than today, right? So today is GDP and jobless claims. I think PCE is going to be noticeably worse. Yeah, so we got a lot of fear on the horizon too, man. Yesterday, that's one of the things that we're seeing the most is just fear. Chip news, tariffs, freaking everybody out, man. All right, guys, so we got 40 minutes left, about 35 minutes before GDP releases. 45 minutes. I guess a lot of people bought cars before tariffs, so it could be a boost for GDP. They're just speculating. PCE is at price to equity. This is personal consumption expenditures is what PCE stands for. Now, this is the Fed's preferred inflation metric. It's what gauges inflation around for everybody. So this is the Fed's preferred inflation metric, right? This is what the Fed looks at to gauge inflation. It's what the Fed looks at to see what the risks to inflation are. And again, they're expecting a slight uptick month to month. So last time they showed up at 2.6%. This time they're expecting 2.7%. So they are expecting a slight uptick month to month. And that's freaking a lot of people out, right? So we do have inflation worries to a certain extent. Now, if we come in low, that's great, and we might get some optimistic, bullish reactions to that, of course. But if we don't come in low, you know, and we come in high, the market could panic. And I think the market's already fearful right now. We've got weak tariff economic news and stuff like that. So I think the market's kind of fearful already of weak economy. And I think if we get high inflation, we're going to hear stagflation constantly. Looking at our poll numbers, 39% think higher GDP, 38% think lower GDP, 23% think as expected. Yeah. Do you think the market has begun pricing in a recession? I don't know. Maybe. Honestly, it depends on how we react April 2nd. I think April 2nd is going to be kind of, I call it Judgment Day, because that's the day where we're going to see if we get optimistic reactions or fearful reactions. And I think it can honestly go either way, you know. Most likely negative GDP, simply boycott. Yeah, I mean, maybe. Pump today, dump hard tomorrow. Yeah, I mean, we honestly are down a lot. So if we look at a 10-day chart, this is the drop yesterday from chips and the NASDAQ and the NQ. So this is the rebound, or this is the drop, and this is the rebound back up. So big drop and a small bounce back. A lot of it's going to depend on chip stocks as well here. I think Nvidia and others are going to influence the market. We could also look at Tesla. Tesla might influence things in some ways, but yeah, we really have to pay attention to Tesla, Nvidia, the NASDAQ, and more, because they're going to influence everything else. Again, the reason the market dropped overnight, fears from the U.S.-China chip war is what this is. This is absolutely fears from the U.S.-China chip war. Again, the current administration added 80 Chinese companies to a blacklist, citing national security concerns. This included Inspur, which is China's largest server maker, and they also buy NVIDIA chips. And so Inspur also purchases chips from Intel and AMD as well. NVIDIA on this news fell 6% yesterday. AMD went down 4%. Intel dropped 3%. The Philly Semiconductor Index, SOX, fell over 3% as well. D.A. Davidson analyst in a email from vacation said, quote, NVIDIA is getting ensnared in the U.S.-China trade dispute is a negative development. Obviously, NVIDIA has massive AI data center business. It getting caught in the middle of this U.S.-China trade war is bad. You know, the data center business has been one of the biggest businesses overseas out of all three major chip companies here in the U.S. Bernstein Research said NVIDIA's fiscal 2025 total revenue in China was about $17 billion, including data centers, automotive, and networking. He thinks data centers alone contributed to $12 billion at least. So, yeah. Ragson told MarketWatch China is an important market, but at its highest level, it's only been about 13% of NVIDIA's revenue. China contributes about 5% of the company's EPS, he added. Still, it's freaking people out, and the market is down big yesterday, mostly from this news. There's a couple other developments that are causing drops in markets, but it's mostly down on this specifically. So, yeah, y'all hit that like button, hit the notification bell. We appreciate it. Bump it up right now. Hey, what's up, Beach Bum? I gotta look up what some of these words mean. Hold on. What does PAMP mean? I don't know what PAMP means. I'm not cool anymore, guys. Like, what does PAMP mean? P-A-M-P. A cryptocurrency that is under a strong upward market trend. Is it making fun of the word pump? Is that what it is? Again, NVIDIA bouncing back up, though. It's almost at 20.1 thousand here, so it's moving up some. Pampers? Diapers? Any news if Elon will buy back his own stock? Maybe. Okay, gotcha. All right, so AMD is down over 3% this morning in pre-market. So look at AMD. It's down big, too. Over 3%. So AMD did not have this kind of rebounding nature like the NASDAQ did. NASDAQ bounced back up, but the NQ did not. So the NQ is at 112s. AMD is at 106.30s. What is that, Paul? New moon? What is that? Pamp it, basically pump the stock. Okay, gotcha. XPO board sets new 750 million share repurchase authorization. I'm still keeping track of stuff. The secured overnight, the SOFR rate was 4.35% for March 26th versus 4.33% for March 25th. Yeah, I'm tracking everything here, but Mexico trade balance came in at 2.21 billion, estimated minus 0.527 billion. Yeah, AMD got another downgrade. So AMD got another downgrade on tough competition with NVIDIA, according to BBG. Europe is preparing its response to new import tariffs announced by the U.S. No timing yet. EU Commission spokesperson says answer will be timely, robust, and well calibrated. All right, so China server maker, according to Market Chatter, MT Newswires, NVIDIA's H2O chips are in short supply at Chinese server maker H3C, according to Reuters. They said H2O international supply chain faces significant uncertainties, the company said in a word issued Tuesday. The report said the shortage of the most advanced NVIDIA chips, which is the H2O chip, allowed to be imported, could create obstacles for the country's AI intelligence goals, according to Reuters. NVIDIA and H3C didn't respond at all to Reuters' reach out. All right, guys. So, yeah, a lot of stuff going on today especially, man. We got GDP as well. All right, guys. So, yeah, stuff's going on. Let me check up on the chat. How you guys doing? Yeah, so moon phases typically have good reactions, huh? Honestly, we got ISM service today, jobless claims, and GDP. So honestly, it's going to be a busy day. Yeah, so again, tech stocks reacted trade developments. NVIDIA down 1.6 in pre-market due to concerns over new Chinese and energy regulations affecting chip sales. Yeah. All right, so again, guys, you might want to read this. So here's a full breakdown of basically everything going on in markets. We also have a little bit of an economic calendar at the very bottom, if you want to check it out. Yeah, so this kind of breakdowns everything, headlines, chip news, market news, all that good stuff. And if you want to give me a follow on x.com, here is that page. Great way to help support your boy here in this channel. We got 25 minutes before GDP data is released here live. Hey, give me a follow. Hit the follow button. Hit the notification bell. We appreciate it. All right, let me catch back up with the chat. Pamp. I'm gonna have to start using the word, I guess. John, have you had any thoughts on Intel? The president's further support Taiwan Semiconductors taking over the foundry of a new CEO. Yeah, I think all chips are moving together. I tend to like AMD chips. I think Intel should be better than it is. I think it's down a huge amount. It's down like 50% in the last year, and I think that seems cheap, but I bought it last year and lost money on it, so I really don't know what Intel's going to do. AMD, I do like AMD chips. When I buy my own personal computers, I like AMD. NVIDIA obviously has been the most hyped up stock over the past few years. And I think we're just going to have to wait until April 2nd to see what happens with a lot of this stuff. We're just going to have to wait until April 2nd. Yeah, I feel old too, to be honest. Hey, appreciate all the follows. Thanks so much. Yeah, Netflix down to 960s. Palantir coming down all the way to 91s again. Look at the NASDAQ turn here, chat. So the NASDAQ is turning. We got over 20 minutes until GDP data drops. Over 20 minutes left still before GDP comes out. Honestly, hopefully we get some good stuff. But, sheesh, man. It's getting close. Hey, thank you, Maria. High Def, you got a gifted membership by Maria. Thanks so much. Appreciate it. Good morning. Today will be a good day. I'm learning productive day regardless what the market does. Another day, another experience. Yes, sir. We'll see what happens. Are we retesting new lows? No. So the new lows are all the way down here, right? So if we look at the NASDAQ on a 5-day chart even, right? This is the low. Here's the correction, right? So here's the real correction. If we could break under this level, 19.2s, 19.170, that's the low. Right? And we still got a long way to go. So yesterday's correction brought us down a little bit over a third of the way down. But we still need the last 2/3 if we're going to break this low down here. So we still got a long ways to go. So we're here right now, right around 20,000, but we need to break down to almost 19,000. So we still got a full $1,000 or full 900, yeah, roughly $1,000 in the NASDAQ, about 950s, 920s or so. To get to break that 5 or 6 month low right there. Nvidia's 5 or 6 month low is at 102s. So Nvidia hit 102s on March 10th. It's at 111s right now. AMD, taking a look in the same context here, lows are 93s. It's at 106s. So we still got a ways to go. The SPY, if we're taking a look at the SPY lows are right at 550. We're at 570s. QQQ, 465s. We're at 480s, so we still got a ways to go before we break those lows down. If we look at 10-year Treasury yields, I'm sure they're going to be down over the last 24 hours, but who knows? So they actually opened up high here. Interesting. Maybe the economic weakness causing some inflation stemming from tariffs. Real correction is coming. We'll see. Yeah, we'll see. Great job as always explaining everything to us in an easy way to understand. Thank you, Tony. I appreciate it, brother. Thank you, sir. Yeah, so yields are actually up a little bit day to day here. Here's bond yields. They've been moving up, which shows a higher interest rate sentiment. Bond yields increasing shows a higher interest rate sentiment. Again, I'll tell you one of the most important correlations to understand in markets. One of the most important correlations. It is the correlation between bond yields, interest rates, and bond prices, right? The easiest way to understand it is this kind of blueprint to understand it, right? Which is bond prices. Like an example of this would be like TLT. TLT is like bond prices. They're down, right? They're going to inverse bond yields because of supply and demand nuances mostly, right? Supply and demand nuances makes bond prices and bond yields inverse each other. They do the opposite. So TLT is down, obviously, over the last day. And if you look at TNX, which is, these are a little bit different. TLT is long-term bond prices. TNX is short-term bond yields, but they're still, the correlation's still close enough. But you can see like yields are up, bond prices are down, right? So again, bond prices and bond yields inverse each other. That's the first correlation. The second one is that bond yields and interest rates follow each other, right? So if interest rate sentiment is down, if people think we're going to have lower rates earlier than expected, what we'll see is bond yields decrease because of lower interest rate sentiment. If people think we're going to have a higher interest rate sentiment, if people think it's going to be a longer period of time before we get rate cuts, they essentially think interest rates are going to stay higher for longer, we'll see bond yields increase. And so that's the correlation. If you watch that, you can understand the reactions to economic data like GDP and PCE and how that influences interest rate sentiment and bonds. Really important correlations to understand. And so if you understand those three, it makes a little bit more sense, right? You can watch it a little bit closer, and it makes a little bit more sense if you can do it that way. Thank you for running this channel day every day. Hey, thanks so much, man. We appreciate the support. We will hit that by tomorrow. 1 to 2% each day will do it. Hit what? Oh, this drop? Yeah, it's possible. It depends on how we react to both GDP today, PCE tomorrow. I'll tell you what, next week is going to be, if we're going to get volatility, it's going to be next week. PCE on Friday might be really volatile, but volatility next week should be pretty high. I honestly, it could go the opposite way, though. Because we have so many consolidated economic reports, it could be the opposite as well, right? Where we have so much consolidation of economic reports. We've got Tariff Day, JOLTS job report, ISM service and manufacturing. Actually, wait. Today we have... Hold on, let me look this up. I don't know why I thought we had ISM services today. No, so ISM manufacturing is April 1st. April 3rd is ISM services. So yeah, we don't have ISM services. Yeah, next week is going to be busy. Next week's going to be the busiest day of the week. Or the busiest month of the year, I mean, in terms of economic data. We just got enough consolidated there. Y'all know we finna crash, stop the cap. Maybe we do crash. Honestly, again, I thought we might correct soon in December, late December. And we did correct. As for what we do now, I think it can honestly go either way. I think we're getting closer after yesterday for sure, and I think it's looking like we might break those lows and keep coming down. But honestly, I think it can go either way. We might bounce back. I've seen it happen both times. I think the timing's a little bit... I've had people mention crashes a lot over the past 5 years of me running this live stream. So many people have mentioned crashes and corrections, and the market's going to crash. And nobody screams manipulation more than somebody who's wildly wrong about a crash prediction, I promise. Anybody that's wrong about a crash prediction, they want to act like they're right, and they want to say they were right, but manipulation, blah, 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 right? Don't get mad at me for saying this, but you know it's true. This is a situation now in which I think a crash thesis is a little bit more justified than it has been over the past 5 years. I think we have the time frame correct. The last real crash we got was in 2008. You know, that was some time ago. The last real significant, big market pullback was 2008. We've had the AI boom, which sometimes precedes, big tech revolutions sometimes precedes market downturns, crashes, and corrections. We've had that. That fits on par with it. We've got the mania of AI. I think at this point in time, a crash thesis makes a little bit more sense, but I think it could also obviously go the other way. We might honestly just rebound and rip back up and start retesting highs and procrastinate the crash, and sometime into the future. I don't know. I think either one of those things can happen. I think there's variance, and I think everybody wants to believe they're Michael Burry and they can be the contrarian that predicts market crashes. And you better believe if we do crash, everybody and their grandmother is going to act like they were right about it. But, you know, just be smart, guys. We got 15 minutes before GDP comes out. I mean, I don't know. I think that was a correction. It depends. I guess you could consider it a crash. But whether people think 2020 was a crash depends on what your definition of a crash is. If we look at 2020 here, I think this is the crash we're talking about. We can look at it from a percentage basis here. And honestly, look how crazy the market's been since then, man. So yeah, we dropped from 98s all the way down to 66s. A lot of people are going to consider that a crash. That is a 32% drop. I mean, I guess you could consider this a crash. The difference, though, is that, like, we didn't bear market at all from it. Like, we dropped like that and then immediately bounced back. Within 3 months, we were back, right? So you could call this a flash crash. That might be true. This is a bigger correction that we got during the high inflation, you know, restrictive Fed situation of the 2022 period, right? 2022 Fed was very restrictive. They did a bunch of rate hikes. Inflation had spiked. PCE inflation was like 7%. CPI inflation was almost 10%. And so the Federal Reserve pivoted to a more restrictive stance. They started raising interest rates to try to push this inflation down, because by raising interest rates, it restricts spending. People have less cheap access to money because interest rates are higher, and so they tend to spend less. Businesses take out less loans, expand less, and it pushes the economy down, ultimately allows prices to settle a little bit, which is the goal of a restrictive Federal Reserve. They did all these Fed actions, and the market corrected from it. And honestly, if we look at this, just taking a look at the big corrections and crashes we've seen over the past 5 years. And again, some people, the real bear market is what I'm talking about. Maybe I used the wrong word. A lot of people are going to consider these crashes and corrections, and these were only a couple years ago. But I think, let me see, hold on, this was 16.5s at highs. 16,500 down to 10.5s. That's a 30% drop. Yeah, 36% drop. So, yeah, I mean, a lot of people are going to consider this a crash too. So maybe you guys are right. Yeah, maybe you guys are right. And again, in that case, we've had one in the last few years. I still think we have some of the economic conditions. Like I'm looking at 2000. Right, in 2000, we had the dot-com boom in the 90s. In the late 90s, and we had the dot-com boom. All the dot-com stocks, all the internet stocks ran crazy. They had the crazy bull run of the late 90s with internet stocks. And then in 2000, the check came, and a lot of them failed. A lot of them went out of business. And that drove the market down substantially. We had one of the longest bear markets in history after 2000. And the internet was a good technology. You know, it's not like the internet was some fake technology. We're using the internet now still. We're trading on the internet now. But we still had one of the longest bear markets in history, even with the valid technology of the internet. And I think we're going to see I think we could see a similar thing with AI. And that was the thesis of my correction in December, which is that we've seen a lot of mania from AI. We've seen a lot of upward big action here. At the same time, though, like, y'all have to understand, big money has an incentive to keep this thing moving. They want to keep stocks going up. They want to keep investments bringing in good yields. They have an incentive to keep this ball rolling. And so, you know, while we did correct 10 to 15% in a lot of stuff, whether we continue down, I think it's up in the air. I don't think it's super easy to predict. I think it could go either way. There's a lot of variance with it as well. And again, right now, we could also try looking at recession. Speaking of GDP, today's GDP is expected at 2.3%. We also have jobless claims unemployment. We have jobless claims unemployment dropping in 9 minutes. Again, about a month ago in late February, Atlanta's Fed GDP Now tracker showed a 1.5% decrease in the first quarter, which is our current quarter. Remember, GDP is a lagging indicator. The GDP that drops today is last quarter's, not this current quarter, which is quarter one. It's last quarter's, which is quarter four of last year, right? That's the GDP we're looking at. They think this current quarter, or at least they did a month ago, is down. They think we're going to have a negative quarter this first quarter of 2025. They think it was 1.5%, but this is subject to change. It's a lot of variance in this number as well. So you want to be careful here. Also here, chat. So again, 8 minutes here. We got 8 minutes until GDP comes out. Let me know if you're bullish or bearish. Yeah, I mean, the reason we rebounded so fast from 2020 is all the economic stimulus that followed that. Like, we dropped in 2020. People freaked out. The Federal Reserve said, hey, we got to save us. If not, we're going to hit a recession, depression. And people criticize the Fed for this action. But honestly, if they didn't do this, they would be complaining about that as well, right? If they didn't step in and do economic stimulus, they would be saying, oh, the Fed's not doing anything. They're just watching us, you know. So I'm not the biggest critic of them in that regard for 2020. I think it's understandable. They had to step in. They did some economic stimulus. They did quantitative easing, which is money printing, where they create online bank reserves, and then they use those online bank reserves to buy up bonds and other financial assets. Whew, dude, my arm hurts. I got armbarred yesterday, dude. This thing freaking hurts, man. Freaking Drew, dude. Ugh. Dude's so good. He's so good at jiu-jitsu. Anyways, back to my story. I'll start talking about MMA and jiu-jitsu, and I want to stay on topic here. They did quantitative easing, which is a form of money printing where they create online bank reserves, use it to inject liquidity by buying up a bunch of bonds, expanding their balance sheet, and injecting liquidity into those markets, ultimately stimulating the economy. They also brought interest rates down to almost zero. QE is a more desperate response. But one of the other reasons we got inflation was like supply chain problems. And so all of that stuff mixed together caused the inflation spike of 2022. And but it also helped us rebound faster than we would have from that big flash crash that we got in 2020, which was just an initial reaction to everything going on, the lockdowns and everything that happened in 2020. You guys know. So all right, guys, we got 6 minutes. 6 minutes left. You guys ready? Yeah, so the big news today, again, one of the big news stories, the president's 25% tariff on cars and light trucks not made in the U.S. It's causing a lot of vehicle companies like GM and more to decrease. GM, Stellantis, Ford, Tesla all traded lower. Overseas markets in Germany, BMW, Porsche, Mercedes all down. Volkswagen all down. But the big three here in the U.S. are Ford, GM, and Stellantis. They're concerned about their impacts. A lot of them make vehicles in Canada, Mexico, and China overseas, and so they see higher production costs due to these tariffs that were announced today. Obviously, we also had some other news about chips and their impacts here. The U.S. on Tuesday added dozens of Chinese companies to a blacklist over national security concerns. The targets included subsidiaries of Inspur, which is China's largest server maker and a buyer of NVIDIA and other chips. That's one of the reasons the market decreased so heavily yesterday, is because of that chip news. So a lot of stuff going on. This is all leading into big tariff day next week, April 2nd. Big tariff day next week. Yeah, y'all be careful. Yeah, a lot of economic stimulus happened. We had stimulus checks, like direct stimulus checks. We had quantitative easing by the Fed. We had low interest rate. They cut a bunch of rates, brought interest rates down to almost zero to try to save us from the recession that we would have gotten, the deeper recession that we would have gotten in 2020. They're trying to get people spending, working, businesses spending, working, and so that's why they're doing. That's why they did all that economic stimulus. But yeah, y'all just be careful. Again, we got GDP data dropping soon here. Chat, GDP data dropping soon. Four minutes. Y'all think we pump up on April 2nd or down or go down? That's a good poll option. Do you think we go up or down on April 2nd? All right, guys. Hey, we have 3 minutes left here, chat. 3 minutes left. Remember, we got jobless claims unemployment coming out too. So jobless claims unemployment is how many people are filing for unemployment week to week. That drops in 2.5 minutes as well. Again, y'all hit the live button next to the play button. Make sure you're fully caught up on stream. We'll see how the market responds to all this stuff here. Again, bond yields opening up higher. Look at bond yields open up at 4.38%, almost 4.4% for bond yields. I'm going to put gold up in the middle, and then we'll put NVIDIA on the right side. And then we'll put the NASDAQ up on the left side just to watch everything that happens here. We got the NQ on the left. We got gold in the middle. And we got NVIDIA on the right side here. I'll put some short-term charts up so we can really kind of watch the reactions that we get from all this stuff. And yeah, a lot of these are obviously down on the news today. We got 2 minutes left, chat. 2 minutes. I don't know. We got jobless claims unemployment, and we have GDP dropping at 8:30 today. So even if you think GDP is going to be nothing, you know, we got jobless claims unemployment filings dropping today. So it's honestly not a small day at all. We got 2 minutes. Yeah, so we have the GDP now show up at 1.8% for quarter one yesterday. So GDP now showed 1.8% yesterday too. All right, guys, here we go. 2.3% is expected for GDP. Jobless claims expected at 225 to 226, which is a slight uptick versus what they were last time. 2 minutes. Really, we got about a minute left. So 1 minute, actually. You guys ready? 1 minute. This timer's a little bit early. I'm going to take this timer off. We got about 1 minute left. 50 seconds, really. All right, guys, y'all hit that live button next to the play button. We got 30 seconds left, guys, 30 seconds. Whew. Green or red? Give me your last minute predictions. Green or red from this event in markets? Green or red? Again, jobless claims expected at 226. GDP expected at 2.3%. GDP 2.3% quarter over quarter for the fourth quarter. 10 seconds. 9, 8, 7, 6, 5, 4, 3, 2, and 1. Let's see what this report shows, guys. Okay, guys, jobless claims showed up as expected at 224 to 225,000. Jobless claims showed up basically as expected, basically completely flat. GDP's reading is a little bit late by the Fed, so we're still waiting for them to reflect GDP. GDP showed up at 2.4%, stronger than expected at 2.4% versus 2.3%. This is for quarter four of 2025. Quarter four for 2025. The NASDAQ is actually up a little bit on this report so far. So again, GDP was actually a little bit stronger than expected at 2.4 versus 2.3%. Jobless claims essentially flat at 224K. And GDP, again, showed up basically flat. Or GDP showed up slightly better than expected at 2.4% versus 2.3% expected. Jobless claims showed 224K versus 226. So there's the data on screen. There's the data on screen. Better than expected for most of these. Jobless claims were slightly lower than the 225 number I had. Basically flat, though. And GDP was slightly higher than a lot of reports here. So slightly better than expected numbers here. Again, market's up big. Look at the NASDAQ pumping up a little bit. It's up to almost 20.1 thousand here. Almost 20.1K. No, pretty good report, honestly, man. Market's up. Up to almost 20.1. NVIDIA at 112s. So NVIDIA almost at 112s now also. Let's get ready for the manipulation comments. We got over 2,000 here, though, guys. 2,000 here. Hit the like button. Hit the subscribe button. We appreciate it, guys. Hit the notification bell. If you want to help support your boy here, we're going to get ready to day trade live at the opening bell today as well. Yeah, so we're going to be trading on Top Step X. Top Step is one of the best ways to learn day trading. Remember, most day traders lose money. And so if you put up thousands of dollars yourself, you're probably going to lose it day trading. Let's just be real here for a second. You're probably going to lose money day trading if you try it, especially in the beginning. And for most people, it takes years to really learn how to day trade. Top Step gives you a 50K demo, and they test your skill with a 50K demo first. It teaches you how to trade. You're still risking something. If you fail, you're out the $49 that the base one costs. But if you pass it, it'd make 3K in profit without losing 2K first, a reasonable ratio. They fund you 50K with a 90% split. And then you get to keep 90% of your profit after that. And you get to keep your first 10,000, I think, in profit after that as well. So it's very similar to funding your own account in terms of the reward you get once you're funded. If you fail, you only lose what you pay for, which is $49. And then they give you a practice account, which is, if you were going to pay for a demo or practice account outside of this, it might cost the same ballpark anyway. And so the value's there. They've paid out almost $200 million since 2020. They fund thousands of traders. One of the best ways to learn day trading. Most day traders lose. This teaches you how to trade with risk, but not too much risk, not risking thousands of dollars. And again, in the futures market, I can basically day trade the SPY and Q price action and the NQ and the ES. No PDT restrictions. Patterns are very similar to blue chip stocks. Just makes sense. It just makes sense. Again, if you want to check it out, they are an affiliate of mine. They pay me money. I am biased because of it. Understand CFTC 4.41, hypothetical or simulated performance have limitations, guys. Not an investment professional, not liable if you lose. There's the link. Check it out. Great way to help support the channel. Understand all this stuff on screen. This is my first plug of the day. We've been streaming for over an hour. And so top 3 best plugs of all time ever in the world right now. And we're going to get ready to start day trading some today. I think we made money yesterday, although I'm not 100% sure. Actually, we might have lost money yesterday. I'm looking at the last time I traded. Yeah, we might have lost a little bit. We made a little bit on this one. So depending on the account. Here's one account. We're going to look to trade right now, guys. Look, that 21 level, that 21,000 level is holding. There we go. We'll put this up. Again, NVIDIA and most stuff initially reacted positive to this report. Again, jobless claims were slightly better than expected. Here's the NQ on the left side. Jobless claims were slightly better than expected, but look at this turnaround. So we're starting to turn all the way back down. Yeah, I mean, Kiara, 2.4% was better than 2.3, which is what they expected here. First move sometimes is the wrong move. We'll see if that's the case here, to be honest. So are you guys optimistic from this GDP report here, guys? So we did this poll. GDP showed slightly higher than expected. So the chat looks like they were right for once. Yeah, the chat was right for once. Congratulations, guys. Votes on the poll were right. Market's bouncing back a little bit. Are you bullish or bearish on the... are you bullish or bearish ahead of tomorrow's PCE inflation report? Bull, bear. Vote on the poll. We got this poll live right now. All right, so markets started to head back up. Let's watch that 20.1 thousand level. We also got a support level. I think we got to look at 20.5s now. And then we got to look at this isolated low down here. Yeah, I think this 20.1 level is one of the bigger milestone levels on this chart right now. So yeah, so PCE data, US PCE excluding food, energy, and housing for quarter 4 came in at 2.3%. 2.3%. Services excluding energy and housing for PCE showed 3.5%. Again, the big GDP report, or the big PCE report, is tomorrow. Again, GDP is 2.4 versus 2.3%. Jobless claims, unemployment 224 versus 226. Let me get ready to... Yeah, so GDP and unemployment filings are out now. Again, you can kind of see them in the big yellow letters behind the screen. The market, honestly, is churning up on this good GDP report. Yeah, so GDP is now out. All right, so we're pushing up a little bit now. Look at this. We broke over that 20.1 thousand level on the NASDAQ. We'll try to trade it. It depends on how much we retrace back down. But again, PCE inflation report is massive. PCE inflation report is massive. So we're still battling that 20.1 thousand level here. Battling 20.1K. Let me check up on the chat here. Tariff stuff is making market a little blah. Yeah, I mean, honestly, next week is incredibly important. Next week is massive. Yeah, so GDP showed 2.4% versus 2.3%. Yeah, 2.4%. Honestly, better than expected. All right, guys. So, again, GDP did drop here. Let's see if we get any better actions. Now, we did reject that 20.1 thousand. I'm going to look to maybe buy a dip here and attack the range, but I think I got to wait for it. I typically do better after the market opens. So, I typically do better after the market opens. So... yeah, so GDP showed 2.4% for quarter four. Now remember, this is quarter four of last year. So this is quarter four of last year. And honestly, man, we'll see if the market gives us anything good. A lot of people, again, think this current quarter is going to be negative. So people are a little concerned about this GDP report. They think the current quarter is going to be negative. And if it is, does that mean we're headed towards a recession? What do you guys think? Do you guys think we're leading towards a recession? Or what? Yeah, I got to mute the background real quick. I got to check something real quick. Hold on. All right, so we did pull back to that 200 exponential. We did pull back to that 200 exponential moving average here, guys. Hold on one second. All right. I love you.
Love you.
Have a good day. All right, guys. So, yeah, markets are down a little bit over the last 3 minutes, but still reacting pretty favorably to GDP. We're going to trade the opening bell live. Hey, bud. How you doing, man? Love you, dude. You all right? Hey. All right, guys. So, yeah, so market honestly dipped down a little bit more just now. We're kind of flat, but we're still green from the GDP report. And, yeah, we'll see if we hold. Yes, recession if the reciprocal tariff stuff backfires. All this means is no rate cuts. Can't be bullish with this data. Yeah, let's check the rate cut expectations here. So, honestly, next meeting, which is a meeting in May. In May, it is expected 88.4% likelihood of a pause, another pause in interest rates by the Federal Reserve. A 12% chance of a cut. 12% chance cut of a 12% chance of a cut in May, 88% chance of a pause. In June, we got almost 60% chance of a rate cut by June. So almost 60% chance of a rate cut by June. We'll see what that means. We'll see what happens moving forward. But, yeah, be careful. We'll see if we get anything good. All right, I'm going to pull my green screen up, guys. That way, I can actually look at these charts. So I'm going to pull my green screen up. That way I can actually look at the charts. Yeah. There we go. That way you can kind of see this chart right here. So there's more view. This is NVIDIA's chart. It's at 112. So NASDAQ still pulling back a little bit. You know, I think as we get closer, like I think if we break, this is my thesis, right? This is what I think. Again, not an investment professional. I have no freaking idea what I'm talking about. But this is what I think. I think as we get under 20K, if the market continues to break down, say we get a bad reaction to PCE data tomorrow, I think as the market continues to break down, if it continues to break down, that is, and we break underneath 20,000. If we break underneath 20K, I think it's going to become much more bearish as we get closer to this low down here at like 19.1 or whatever it is, right? So I think as we get closer and closer to this 19.1 level way down here, that's obviously where things go bearish. If we break under this level here at 19.170s or 19.180s, that's going to be chaotic. But I think as we get closer down, this is a day trading thing, so we got a lot of lines on our charts. I think if we do start to break down under 20 down here, it's going to become more like a magnet to this area. It's going to become much more probable that we're going to just break all the way down and break lows, if that makes sense, right? It definitely doesn't mean it has to happen, but that's essentially what I think, is that once we break under 20K, the closer we get to 19.18, 19.12, or whatever the number is there, the low of the last 6 months, that's when it's gonna be like a magnet, and it's gonna become more and more probable that we're gonna break down under those lows. Of course, though, it really depends on what we get for GDP, or what we get for PCE data tomorrow. PCE data tomorrow, incredibly important. It's the it's the Fed's inflation metric. It's what a lot of investors, traders, analysts, and finance are paying attention to, and so you want to watch it here as well. Subscribe if you haven't yet, because that's a big report. That's a very big report. Yeah, we'll see. Again, if you haven't already checked out Top Step, check them out. I'll put the link up here. There's no PDT roll in futures. This is what I'm going to be day trading on today. I might buy this dip short term right now. I'm going to buy this little dip. We're at the bottom of the range here. It's a small little dip trade. I just want to see if we retrace back up here, and I might add one more position to this, make it 2 contracts and leave it here. Again, you can kind of see, regardless of whether I win or lose on this trade, it's very similar to day trading stocks. There's no PDT roll in futures, so I can day trade the S&P, the Dow, the Russell, gold, some currencies. It teaches you how to trade. They teach you how to follow structure. There's tons of great resources. No PDT roll in futures. Gets you around the PDT rule, teaches you how to trade, and if you fail, it's not the end of the world, right? I've got 3 funded accounts on this thing. They're all in profits, so they're all green. I'm going to end up slicing one of these off, though, here, just to lower my risk in this trade, since it's honestly breaking down some. But it's very similar to day trading stocks. No PDT roll in futures. It just makes sense to learn this way. Almost all day traders lose, and I think sometimes the internet talks traders into funding their own account thousands and thousands of dollars,
in a really unnecessary way. Here, I'm going to have to cut this. This is looking much more weak. I'm looking at 200.5s right now, 200.5s. But again, very similar to day trading stocks. If you want to check it out, I'll put the link up one more time. All right, guys. Good number if it goes down, and bad numbers if it goes down. Maybe. We'll see. Honestly, we did get the little pop here. So we'll wait. We're down about 20 bucks to start the day. You don't really love to see it, but honestly, I might buy this dip again. Hold on. That's too big of a drop, actually. I'm going to wait. That's a big drop. Look at this drop. I'll buy it if it hits 200.5s, and we'll attack the range up to 200.8s. But it's definitely looking red and weak right now and scary. So just be careful, guys. I would be careful buying it. When I say I buy it, it's like a really short-term day trade that I lost $20 on. So I'd just be very careful right now. Yeah, I mean, the data, jobless claims unemployment was lower than expected, meaning less people filed for unemployment week to week. Now, whether you consider that good or bad is up in the air. It means less people were filing for unemployment, more people were working, essentially. Now, GDP just means we had stronger GDP. You know, we had higher GDP, economic strength. Now, it could mean inflation problems. It could mean fears in that regard. With both of them, jobless claims and GDP showed strength in the economy. More strength in the economy than expected is an important context to make there. It doesn't necessarily mean the economy is strong. It means it's stronger than they expected it to be for this metric, or for these two metrics. But I wouldn't necessarily say the economy is strong. I think GDP is lower than it was the previous quarter, and this is looking at quarter four, and I think they think the current GDP for this current quarter, quarter one of 2025, is going to be negative. We'll have to wait and see, though. We'll get this GDP. Well, the initial estimate for GDP for this current quarter is going to be April, late April, in exactly a month from now. That's when we're going to get quarter one's initial estimate, which is usually the most influential and variance heavy. But yeah, that's an important distinction to make. Data is data, but whether you believe it or not, if the market does, it's irrelevant to what I can deduce with my own two eyes. Yeah, I feel you. I get it. I'm tempted to start buying up some stuff here, but I'm going to wait. Things look really weak, and I think if we get down to 2050s, I'll start a position here. All right, we're going to take half of this off since we were very quickly green. I'll add to this now. Take half off there. Get out the rest there. So, yeah, we just made... We're down like $1 on the day. I'm going to short this now too, see if we can retrace back down. But I'm going to add, kind of scale into it this way, up to this level here. All right, so we just got some really good action for my trades there. So we kind of predicted that on key. So we're now green on the day. We did get that quick little scalping breakdown that we wanted from that candle wick, attacking that super extended candle wick. So sometimes what you'll see me do here is like we'll have a candle wick that looks like this, like a really big extended candle wick. The next candle usually is going to come down at least this much. And so what you'll see me do sometimes is short this aspect of the candle wick and then ride it back down, if that makes sense, right? Very quick scalping strategy, but it plays the extension of the candle. is what it does. And so I hope all that makes sense. Like in theory, these big candle wicks like this should signal buying action, like extension on the downside. But in a trending move like this, it can sometimes just mean extension and a continuation of the trend. Like you get a cheap value entry to the trend, if that makes sense, and we can kind of ride it down. And so that's why I longed here and then shorted here. And yeah. Where's GameStop at? I know GameStop had earnings on Tuesday. Where's it? Where is it now? GameStop breaking down here. Look at this. So here's gold. Gold's honestly at all-time highs today. A lot of fear. Gold's at all-time highs. All right, I got to mute the music for just a second here, chat. All right, guys. Market's still in this downward trend. We'll see if it holds this downward trend. Gold at all-time highs here. That's one of the things I forgot to mention. GameStop down to 95s. GameStop break it down. Let me look at gold here. Gold is up, man. Look at gold. All right, so we're at almost $3,100 for gold. All-time highs. We hit all-time highs at 30.95s today for gold. So gold is at all-time highs, signaling the fear that we normally get. Gold spiking up. Let's see if the market comes down. Let's see if it hits 200.5. I'm looking at 200.5. If we do, I might buy that dip. But yeah, also tomorrow we have University of Michigan Consumer Sentiment Report on Friday. So tomorrow we got the University of Michigan Consumer Sentiment Report. That report typically it doesn't move things too much, but it has had a little bit more influence over the last couple months for the inflation expectations is what you want to pay attention to. So like the inflation expectations for tomorrow, let me take a look at this here. So yeah, the inflation expectations, last time they increased the inflation expectations tomorrow. Last time they bumped them up from 4.3% one-year inflation expectations from the University of Michigan for March up to 4.9%. They also boosted the 5-year inflation expectations from previously at 3.5% last time 2 weeks ago up to 3.9%. So that's another metric tomorrow at 10 a.m. We got PCE at 8:30. And then we have the University of Michigan data at 10 a.m. And again, I think a lot of people fear inflation right now. I think that's why gold is running up to almost 30.9s. That might be one of the reasons the GDP report signaled a negative reaction. I see that from some people in chat saying basically inflation is a fear. And so higher GDP makes the market go down. Less jobless claims makes the market go down. Both of these things contributing to economic strength. Yeah, and so y'all just be careful. We're at 200.64s. So again, I'm watching this 200.5 level. And we'll get the music up in a second. I had to turn the music off. Yeah, next week we got Tesla deliveries, we got jobless claims, non-farm payrolls, unemployment, all kind of stuff going on. Hey, thank you, Femi. I appreciate it, brother. Thank you, sir. Yeah, so gold, GameStop. All right, guys. So yeah, we also have a video here. Let me save this. There we go. Let's export it. Get that tag out of here. All right, guys. So there we go. I can put the music back on now. I just wanted to mess with something real quick. Let me put the music back on so it's not stale in here. I'm sorry, guys. I'm sorry. Don't yell at me. There we go. All right. So yeah. So Femi said, John, really cool to watch your evolution as an economic pundit. You are articulating things with clarity, brother. Hey, thank you, man. I appreciate it. I try. My job is to help people understand everything going on, and so, if I could do that well, I'm happy with it. GameStop did 1.3 billion convertible notes announced after hours, 5-year at 0% interest for institutional outside U.S. buyer. Gold will remain high. Central banks don't borrow dollars as much. Oh man, we're done already. Okay, cool. Yeah, so we are kind of consolidating now, though. We're kind of flat on the middle here. John is like the GOAT now. Look at all these people that come and listen to his data. Thank you, Tiffany. I appreciate it. Thank you, sir. Make a prediction about GM. I'm not a big GM fan. Like I tend to like. I like stocks that I like the actual company behind. GM, I don't know. They're not bad. I don't think they're a bad like automaker. I know I might rustle feathers. Just remember, there's a subjective nature of opinions in terms of vehicles. I like American Muscle, but they are obviously getting some negative reactions to the tariff news that we got this morning. The 25% additional tariffs on car companies that produce outside the U.S. Right? Like that's obviously bad for GM and others. So. Oh, no, Tiffany, I'm sorry. Ma'am. I should have said ma'am and not sir, but I'm so used to saying sir, my bad. I didn't mean it. I'm just not paying attention. Usually, that's like a generic response by me. Thank you, sir. But thank you, ma'am. My apologies. She's a long-term viewer, so she's been here for a while. I remember her. I appreciate it. I am the predictor. Pamp? I'm going to start using pamp. I know I'm not cool anymore because I don't understand the cool slang anymore. I just know I'm not cool anymore because I don't understand the slang. My daughter's 15. She knows. My son is young. He's 11. He knows too. He knows more cool slang than I do. Like, I hear him regularly. I hear my son regularly playing video games and saying some variation of, I'm cooked, bro. I'm cooked. Or something like that. So I know cooked is like the latest slang. Like, she's cooking over there. Or I'm cooked. Like, it's done for, whatever context you want to use it. All I know is I'm not about to use it because I'm not cool anymore. That's all I know. If I know anything, it's that I don't know anything at all. And that's all I'm saying. Let him cook. Yeah. Look at Meta, guys. Meta just had a very big negative reaction here. So look at Meta. I don't know what this reaction is from. Look at this big pullback here. So from 607 down to 600. This is a 1% drop for Meta. If you think about it, from 606 down to 600. That's easy math. 1%. Look at this drop. Now, it retraced about half of that already. So now it's down about 0.6%. So now 1% drop in Meta in about a minute. I don't know what happened there. Let me see if there's any news regarding Meta. I know Meta has their Llama AI systems. I wonder if it's related to them. Markets are cooked. Yeah, so look, here's the markets kind of reacting here. Nasdaq's pulling back down some here. Yeah, so again, I'm looking at 2050s. Meta had that big 1% retracement. Palantir is down a little bit as well. We're looking at GM decreasing, GameStop decreasing. Top 3 national treasures. Thanks as usual, John. You should be considered a national treasure. I love those movies. Honestly, we just watched them with my son. National Treasure John. I like the nickname, man. Just put National Treasure in front of my name. Or you could say, like, I was on Top Step TV the other day. Since I was young, nobody ever pronounces just my first name. They always say John London, right? Which is my full name, John London. So they never say John. They say John London. I don't know why. It just sounds good, I guess. But since I've been a kid, all my friends, everybody have called me John London. Might be because there's so many Johns that labeling it John London. But you should put it National Treasure John London. I think that should be the go-to nickname. If I had to pick it, that's what I would make my nickname. Is National Treasure John London, you know. But let me know what you guys think. Just make sure he's saying cook, not crook. There's no such thing as halfway crooks, bro. Palantir had a big downfall. Let's take a look at Palantir. Palantir is down at $90. I don't know, man. The PE is still freaking high. Here's the 200 exponential. So the Q is very flat right now. The NASDAQ, very flat. We're slightly green on the day, but pretty much flat. I'm trying to be patient and wait until the opening bell in 25 minutes. Yeah. All right, so markets are bouncing up. Look at this big rebound. We're at 200.8s now, 200.8s. All right, so we hit 200.8 at that 200 exponential moving average here. I'm still looking at GM and some other ones. Hey, what's up, Relentless? Sounds like rich, famous name. Hi, it's John London. Yeah, I appreciate it. You know, if you heard my full name, it is one of the most pompous names you've ever heard in your life. And honestly, it's kind of ironic because my family does not, like, my family wasn't rich or wealthy or influential or anything. They were, you know, pretty humble in nature, you know. And so my full name just, it's out of place. But I'm not going to say it. It sounds very English. My middle name is Nordic, but yeah, it's just a crazy name. You would never guess it in a million years. Yeah. All right, so yeah, Friday we have one of the most important metric releases in economics, the PCE inflation report. The FOMC and Jerome Powell use this report to gauge where inflation sits in the U.S. And markets respond pretty heavily if the data comes in big over or under expectations. Remember, we're not market professionals, and we are not liable for losses. Oh, man. All right, so market is starting to rebound back up some. What's your favorite video games? So I used to love Zelda, Ocarina of Time, as a kid. Ocarina of Time, my favorite video game of all time. Modern age, though, I play like MLB The Show and UFC 5. I mostly play sports games. GameStop breaking down. It's at 25.4. So GameStop's still decreasing here. Look at it drop. So they had good earnings. They had better than expected margins as well. Like EPS came in, I think it was like 29 cents EPS. They expected 8 cents profit. So GameStop had its third profitable quarter in a row and wildly more profitable than expected. They expected 8 cents a share. They showed 30 cents or 29 cents or something like that. Their revenue missed, though. But their revenue is going to miss. It's GameStop. They're not expanding anymore. They have to really close down stores. That's understandable that their revenue is going to decrease. It's just interesting that GameStop is having this type of negative reaction to it. Where's Bitcoin at? I know they had Bitcoin treasuries in their reserves. Bitcoin's down a little bit today, but not enough to influence GameStop, huh? We got 20 minutes, chat. Weird. It's definitely the top 3 names in the world for sure. Let him cook. Just let me cook, guys, I guess. Is that right? Is that the correct context of cook? I don't know. All right. Yeah, so Friday we got PCE inflation. John the Chef London. John London trading. Yeah, I used to love Halo. Like I played Legend of Zelda a lot when I was like a kid. Like I was like a young kid. In my teenage and adult years, I played Halo with my friends online. Halo 3 was the best one. I haven't really gotten into the latest ones though, to be honest. I don't have enough time to get good at any of them. But yeah. Yes, we got other market news to talk about that just came out. They said the ECB is optimistic with regards to inflation. They think inflation is going to get better. Let me see other stuff we got going on. All right, so look, I'm still looking at that 200.5 level here. John the Chef London. Yeah, for sure, sub, 100% in. Pending home sales are not really going to move stuff. Not really. They might influence real estate in a way of like existing home sales, pending home sales, new home sales, stuff like that. But they're not really going to have a big influence over markets like that. Not unless it's like shockingly higher or lower, which is probably not going to happen. All right, so we are down to that 2050 level. I guess I'm going to buy this dip and just try. So we're in one small position here. We will add to this if we get anything good, but we hit close enough to 2050s. I'm looking for a bounce back to like 2065s, a 15 bounce back tick. We'll see if we can catch it. I took one off for a flat position here just to protect it. I think we're honestly getting too close to this weak spot, and I think if we do break down, it's going to be like a momentum drive. I don't necessarily want to get stuck in it, but I'll give it a second. And I think it might fake out first, like break down and then rebound. Even if it does go up, I think it might break down first and then rebound. There's 20.5s. Tomorrow we don't really have too much. Like tomorrow we have PCE inflation, which is one that we've been talking about all day. Outside of PCE, it's not too heavy tomorrow. Let me see what we got. Yeah, we got PCE tomorrow. That's it. We got PCE in Michigan and inflation expectations and consumer sentiment, which are kind of big, but they're not like the craziest. PCE's big. Michigan data, hit or miss. Yeah, see, here's that big drop I was talking about. Glad I took a piece of this off. Could have been worse, but this is what I was worried about. We're slightly red, but it's not really. We're kind of going back and forth. I think it might honestly rebound back up and do a liquidity grab and continue back up, but it's just not worth the risk. We got this this low down here of the last couple weeks at 20.200.31, and so the risk of it getting close to this level, even if I think it might bounce back here, the risk of it getting close to this and then getting attracted to this level at 31s is just too high, because then once it breaks this, then the fear kicks in again and it can keep going down. So we'll give it time. I typically do better after the opening bell, so we'll wait for that. Eli Lilly is adding Alzheimer's disease resources to online platform it launched a year ago, according to Bloomberg. So we had the SOFR rate come in. The ECB, De Guindo, says it's very difficult to say what the ECB will do in April. We need to be very prudent with policy, for growth of trade war is extremely detrimental, and there's a high uncertainty on growth, largely from trade, main impact of tariffs on growth, and short-lived impact on inflation. So that's going on right now. He said the worst outcome is vicious circle of tariffs and retaliation. It's very difficult to say what the ECB will do in April. Hello, I'm a beginner. Which channel or course should I start with? Well, this one, I guess. You should start with this one, I guess. But we got GDP already out. We got jobless claims already out. So we're going to be day trading live at the opening bell in 10 minutes. All right, so we're still breaking down again as we get closer to this number. So remember, it's actually not 20.3, it's 20.2. So 20.2, actually, I'm sorry, it's 20,000 even. So one of the things you see here, so I was actually wrong about my level. So look, we do see this type of upward trend here. But if we start to hit this level and break down and then break this level, we could get more selling pressure and break down, and that could spark a larger correction. I think I'm probably just going to sit tight until the opening bell, though. I don't know if I necessarily like any of this action. I asked people in the poll, we got almost 1,000 votes. Are you bullish or bearish ahead of tomorrow's PCE inflation? 54% are bullish on PCE inflation. 46% are bearish. All right, so we did break down under 20.5s. We're starting to head towards 20.3s, 200.3s. Or no, 20.3s, 20,031 is what the actual number is. I try to abbreviate it too much, but it's 20,031.50. It's been confirmed a couple different times. Under that, we got 20,020, and then under that, the big level is just 20K, which is a big milestone level, of course. All right, guys, we got 6 minutes. 6 minutes. Market's still churning down here. Downtrend. Yeah, look, we just cracked 2030s now too, so we did dump under 2030s. Again, this is why I cut that long. I was worried this would happen, and again, it's still a little early. We might find support. I'm gonna put up some more relevant finance symbols here, like gold is what we're gonna put up. Gold's been breaking all-time highs. I'm gonna put up like the SPY in the top right here as well. So y'all be careful. But we're starting to see some red action. And again, if we break under 20K, which is not that far away, we're about 31 ticks away from 21 or from 20,000. Obviously, it's not good. Yeah, the Dow has been a little bit more resilient, right? So the Dow is honestly not down that much yesterday. The Dow has been more resilient than a lot of markets. I mean, it still dropped yesterday, but it was down less of a percentage. All right, so there again, we just broke under 2030s. We're breaking down under 2020s, right ahead of the opening bell, guys. So this is ahead of the opening bell too. So we got 3 minutes until the opening bell where we're going to get more volatility showing up. This is looking rough. Again, guys, if you want to watch us day trade at the opening bell, we are day trading on Top Steps funded account program. They give you a 50K demo. They test your skill with a 50K demo. If you pass the test, they fund you. If you fail, you only lose what you pay for it. In this case, the base one is $49 a month. It's only 49 bucks. If you want to see Top Steps page here, here's Top Step. Again, they've had 81,000 payouts to traders in 2024. They've been around for over 12 years. You can get funded in as little as 2 days. If you can make 3K in profit without losing 2K first, following their rules and conditions, they fund you 50K with a 90% split. You get to keep your first 10K in profit as well. You can also buy this one, which is $99 a month. This one's $150. Tons of cool stuff. One Step, all this different stuff here, all these different useful things for Top Step. Incredibly useful. And honestly, this stuff teaches you how to trade. It's $49 for the base one. If you pass it, you get a 50K funded account. You can use 5 mini contracts and more micros, which is plenty of size. You really don't need more than 5 mini contracts to trade. And so it just makes sense. The 50K demo they give you, if you make 3K in profit without losing 2K first following the rules, they'll fund you 50K. They've paid out almost $200 million. If you look at some of these stats, they fund thousands of traders. Just a great way to learn how to day trade. The futures market, it took me a long time to pivot towards day trading futures versus stocks. I learned penny stocks and then went to futures after trading the SPY and Q price action, which is what you can trade in futures with no PDT restrictions. Here's the link if you want to check it out. They are an affiliate of mine. We got the opening bell coming soon. Understand CFTC 4.41. Here's all the links in chat right now. I'm biased. They pay me money, so I'm biased, but genuinely useful for traders. And it's going to allow traders to lose less in the beginning while they learn how to trade versus funding their own account and losing that. And so again, link is in the description. We already broke down under 20,030. And then look, we are now rejecting 20,030 here. If we weren't so close to the open, I might jump in a short right now, to be honest. If we weren't so close to the open, but honestly, we're way too close. All right, guys. Bitcoin break it down to 86,000. Dow is down. Here's the opening bell. All right, so there's the bell, guys. Watch 20,000. 20,000 is the level, in my opinion. Watch 20K. 20K is the level. Look at it right there at 20,000. Look at this breakdown. Watch 20,000. We just broke down all the way to 20,007. We're 7 ticks away. And look at that retracement back up. Here's the retracement back up. Watch 20,000 as a level. We literally just tapped very close to it, very close. But look at that retracement candle. It's the opening bell. I would jump in short here, but it's the opening bell. We got very close to that 20K level. I have a couple combines I can play with this here. So we'll try it, actually. I'm going to short this pop. It's the opening bell. If I lose, it's a combine account. It's not the end of the world. But I'm going to short into this, expecting weakness to show up. And we're going to just go full size, see if we can make 1,500 bucks or so. There we go. Took a third of it off. Took another third as we retrace up. I want to see more breakdowns here, to be honest. I can probably add back too. So we're going to jump in right at this 2050 level. Hopefully we reject. Again, this is a combine account, so if we fail, really not the end of the world. We're just playing with it at the opening bell because I don't want to attack this volatility in a funded account. Ah, dude. Yeah. We took some size. We wanted to play with it, but it's all good. We'll put our funded account back up and just wait for price action. I should have waited maybe to the 200 exponential. Palantir's honestly shooting up too. Yeah. Honestly, if we were just a little bit earlier, I think I got in too big a size right there. But again, it's just a combine account. It's $50 there, so we didn't lose 2,000 or anything like that. We lost 50 bucks. I'll be all right. I do like this rejection though. If I do start to trade right now, we're only 2 minutes into the day. It's still too early for me to trade on my actual accounts. I'm going to have to wait a couple minutes, even if we get a good breakdown. So my breakdown thesis was correct. We just pushed up a little bit too much right there. A little bit too much. Yeah, look, there's the big breakdown. Watch 20,000 down here, chat. Watch 20K. Yeah, definitely top 3 worst ever right there. The Dow just turned. Look at this. There's 20K. We just tapped it. I'm going to have to short this. It's a little crazy to short, but I think we're going to get so much red fear from this. I think it's justifiable. There we go. There we go. All right, so we just made about $30. So we just cracked the lows of the last couple months. And now we're still breaking down here. Look at this. I'm definitely not going to long here. This is way too weak. We got ourselves back to mostly flat on the day. Fear from breaking the low of the last couple, like, let me see, that 20,000 level was the low of the last week and a half. So the last time we hit that $20,000 level was in on the 21st. So we just cracked the low of the last week now, and we're breaking underneath it. As well as telling people to watch 20K because that's the low of the last like week and a half. The last time we tested that level was on the 20th, I think. So, last week, really. Now, sometimes we crack these levels and then immediately retrace back up. I would short this right here. We do have a level right here at 20,000, but we just ripped back over it. Maybe I should have shorted it. The redness is certainly showing up. Do we keep breaking down here? This is a big fear level right now. Under 20K is a big fear level. There we go. Starting to flush. Yeah, there he goes. Just broke lows again. There's 19.75. We have another level at 7.5. We tapped right off of it. Look at that. I'm going to try to short this. See if we get some flush retest, but we don't have a lot of profit. Alright, so we just made another 15 bucks. We're now green on the day. Kind of slowly attacking this. This is a lot of volatility for scalpers, so scalpers have a little bit of an opportunity here. But let's see if we reject 20,000 again. Yeah, where's Nvidia at it? So Nvidia, let me put that up actually. Nvidia cracked lows. The next level to watch here for Nvidia is the low of 102. So this is the low of the last like few months. We just cracked 1975 now. Let's see if we keep going down. A lot of red action coming through here for sure. Yeah, this is brutal. Definitely red. Look at this now. Watch 1950s. Watch 19.5s. 19.95s. I mean 1950s. 19.950s is what I mean. So I'm talking about this 50 level right here. Let's see if we tap it. What happens? Yeah, I would just be careful, man. Markets are turning. A lot of red pressure. We just broke under 1950s, which means that we have a lot of volatility showing up. Look at this red action here, chat. Wow. Crazy. All right, so we got a little rebound back up here. Let's see how far we bounce back. If we get to 75s, I'll short it up here. I'll take one right here and then add some more. If we need to. But I guess I don't need to. All right, so we're out. Another $20 or so in profit there. Slowly but steadily building up a cushion here on the day. We got up to 70, not quite 75, but it was good enough to short, and we wrote it back down. Well, it's definitely not a crash, but it's certainly a big pullback. So, like, if we take a look at the NQ on a longer term perspective, here's a 4-hour chart. Here's a daily chart. So, like, here's the big correction we've seen over the last few months. Yesterday and today account for this right here. So it's certainly weak, but I still think we got to get under 19.2s, 19.130s, 19.2s before we really start looking like the correction's continuing down. So we'll see if we get that or not, but it's definitely not looking good. All right, so here's that 950 level we talked about, but GameStop under 25s now too. Still just looking really weak, man. I'm definitely not going to trade against this. Man, why am I so regarded? I would say if there's a regarded person, it's me. I'm probably the top 3 most regarded person in the world right now, is what I'm saying. What do you mean by that? Regarded. I don't even know what you mean by that. I was just messing with irrationals. But what does that mean? Explain yourself, sir. Netflix bouncing up a little bit. Palantir still looking pretty red, but it's right at $90. And so we could find support at this 950 level and then bounce back. Bitcoin breaking down under 86,000. It means I longed Nvidia before the crash. Yeah, I would say I'm the most regarded of the top 3 most regarded ever channels in the world right now. Whatever that means. GameStop breaking down big. The Dow is at 42.5s right now, 42.5s. Nvidia down to 110s, under 111s. Steve? The GOAT. The Dow under 42, under 42.6. Dow broke lows of yesterday. Dow just broke below the 100 EMA on a 4-hour chart. Now testing the 50 EMA on the 4-hour chart. Yeah, again, I'm not longing right now, that's for sure. We're slightly green on the day, but it's not much. I got to scale up my size here too, to be honest. If we bounce back to 20K, I might short that. But I need to bounce back to 20K. That's the plan right now. Why am I tempted to go long right here? Don't do it. Don't copy me. Top 3 worst trader ever. Don't do it. But don't copy me. Not an investment professional. I'm not liable if you lose. I have no idea what I'm talking about. Might be wildly wrong about everything I say. But we got a little bounce. Honestly, we're starting to get some consolidation, which is generally good for a slowdown of the previous momentum. Is why I kind of wanted to long there. And it looks like it would have worked. Look at this. But still, the risk of it cracking lows and dumping down is too high. So I don't want to get stuck in that. I'm good. $300 away from losing your combine. Yeah, honestly, at least you didn't lose it like me. Honestly, here's 7.5s. 7.5s might reject. I can short 2 levels in my chart. 7.5s or 20s. I'd rather short 20s, to be honest. Even though 7.5 might work, and it looks like it is. We'll see if that's the right decision. I could short 7.5 and look for a 25 tick like trade down to 1950 or 19.950s, or I could short 20 and look for a 25 tick trade down to 19.75s, 19.975s. That is. Which one do you guys think is good? Oh, wait, there's 20s. I don't want to miss my trade here. All right, we took half off there, locked it in. All right, we might as well get out the rest there. All right, we made about $30 really quick. I'll short it again, too, if we retest it. I wanted 7.5s. Kind of a wimpy hold there. I got out pretty quick. Could have had more, but green is good. Honestly, if I just waited until the opening bell to trade, I think I'd be green almost every day. Do I want to short it again, though? There's 20 right here. Tapped it. I think I'm just going to wait now. I got the 20 rejection originally. There's another rejection. I could have had it. 20,000 is such a big level. It's such a big level. And look at that retracement right at 20K. So I should have shorted it again, too, to be honest. But kind of shows you why milestone levels are important to watch. Because look at that reversal right at 20K. Ah. I should have done it. Look at that. It's okay. And look at 7.5 too. So that 20,000 to 7.5 thesis would have worked perfectly too. It literally just tapped right off of 7.5 right here. Look at that. So this is the range. You see, I have the levels on my chart. This is the range I wanted to attack. The problem is I got so green so quickly. I was worried about a retracement back up, and so I ended up cutting it early. But it's all good. Look at that flush. Eesh. Here's the breakdown. Do I want to short this retracement too? I think I'm going to. It's an overextended retracement, but I got to be careful. I'm going to add to a trade here, although I don't like it. Eesh. Rejection. I'm going to cut half of it there just to protect it. And then I'll give the rest a little bit longer, but I'm kind of playing with the profit that I built up on the day. I built up a cushion, and so I'll try to play this 20,000 rejection one more time, but I feel like it might rip up in my face here. So I got to be really careful, honestly. All right, I took half off there, to be honest, and we'll see if that works, but I felt like it would do this. I honestly felt like it would do this too. It's all good. We'll be all right. We're flat on the day now, so I'm just going to switch to a different one. And then we'll play with the one that we're not going to lose too much on. That one hurt a little bit, but it'll be all right. Top 3 worst trader ever. So we're still creeping up. We'll see if we can hit that 200 exponential spot now. So we're tapping some levels. We'll see if we range back down. But honestly, look at this strength showing up. There's 2030s, which is that previous low. Still rip it up big here, guys. Wow. See if he gets pushed down. Let's try it up here. See if we get rejected here. We're honestly at a pretty big support or resistance level. I just brought myself back to green in that account that I lost on too. So we're trading small. But I'll show you some of the trades that got me back to green. But honestly, it's been a back and forth day. Look, here's the trades. Here's that big string of losses we got. And then we did catch a short right here at 2030s, which was a resistance level. All right, guys. Hey, we got a premiere that's starting right now. Guys, a premiere that's starting right now. I'll send you guys over there. I love you all. Y'all be safe today. A lot of crazy stuff going on. As soon as I end this stream, it should immediately bring you to the premiere of this next video that we're doing here. And so here's the link. Check it out. I wanted to show you guys how I ended the day. If it doesn't redirect you to the video, let me know, but it should. It should. I'll see you guys over there. Y'all be good. Have a great day.